Hi, this is Patrick Mack with Hotel News Now. I am here at the 100 Hotel Investment Conference with John Mellman, President and CEO of ARC Hospitality Trust. John, thanks so much for joining us.
Nice to meet you.
Really appreciate it. So John, ARC Hospitality is a very interesting company. It's interesting for the fact that you folks have a fairly sizable portfolio, but really you got there with two major transactions as far as I can tell. Why don't we just start right at the beginning? So first transaction, you acquire 6 hotels, correct?
Yes.
Walk me through that one.
Sure. So we became effective as a non-traded REIT in January of 2014. We established our distribution rate at 6.8% in February, and then we made our first acquisition of 6 hotels, one of which is here in Atlanta with the Georgia Tech University. And that portfolio was purchased for about $106 million. And then we embarked on our diligence phase of the equity-ins transaction, where through March and through June we analyzed each of the markets critically and reviewed the opportunity and ultimately bought 116 hotels, which we announced on June the 2nd for slightly more than $1.9 billion. The portfolio moved around a little bit, and we removed 10 assets on the portfolio, and then at the end of February, through our fundraising, when it was completed, we closed on a $1.8 billion deal for 116 hotels.
What gave you the confidence to allocate that much capital when really you were just making your second transaction?
So we are a serial fundraiser. We raise money from the retail investment community to the tune of $3 to $4 million a day right now. So typically in the non-traded REIT space, it's a blind pool type of acquisition environment. You say you're in the retail space, you say you're in the New York office space, or you're in the healthcare space, and you're betting on that portfolio manager or team to buy those types of assets. We wanted to turn this one around a little bit, and because we did not have the so-called experience in the hospitality market as a firm, we wanted to show everybody that this was an identified, specified pool where we had $500 million in revenues, and we were in 32 states, and we had 15,000 rooms, and 84% of our hotels were branded Hilton or Marriott. For our retail investor, that was a game changer. And that enabled us to accelerate our fundraising for a first-time fund faster than anybody else has ever done. A year ago, to the day, we had raised a cumulative amount of $2.8 million. Yesterday, we crossed $406 million in 1 year. I don't think we can do that we think we're going to be buying Hiltons and Marriotts in the following 10 states, and I'm not sure where or when. Now I have it. So that is a very interesting proposition for the retail investor.
So now that you've accomplished what you've accomplished, what next? My
goal is to have a company with 200 hotels. We're about 122 done, so say we're 65% done. We are earmarking 75 odd hotels in the same types of markets with the same 5 brands that we can purchase on a programmatic approach. We'll put a deposit down and we'll buy either a 10-pack or a 20-pack or a 50-pack over the next 9 months from an owner that will sell in 3 different, let's call it, acquisition dates that will match fund our fundraising over those 3 dates, and we'll accumulate the fundraising, draw 10 down, accumulate the fundraising, buy 15, whatever it is. So we'd like to do that by year end and position ourselves for either a transfer or conversion from a non-listed to a listed entity, or an outright sale, and to try to create liquidity and value creation on behalf of our investors.